Welcome back to another episode of Neil Invest. Thanks for joining me here today, guys. Today we're going to have a look over the trading 2 and 2 portfolio that I have in place. Now, the purpose of this portfolio is for me to reach financial independence in the next 12 years. So what I'll be looking to do on this channel is tracking that portfolio over that time. I have a number of different portfolios and a number of different brokers, and we'll touch on them from time to time. But what we're going to do in today's video is we're going to look at the top movers, the top 5 stocks that have grown and the top 5 stocks that have fallen over the last month as well. So I'm not going to go into detail in terms of all of the holdings that I have. Look over previous videos if you like, if you want to catch up on that sort of detail. Today we're just going to look over the moves over the last month and look into why they might have moved as they have. So first up, the portfolio is looking at 9,600 quid right now. It is currently 8% up, 733 quid. I haven't added anything into this over the last couple of months still, because I'm still paying off that tax bill that came in through unexpectedly, but that's paid off now, and it means that from next month I can start dropping into this again. I'm probably going to look at putting about £1,000 into this a month if I can, try and max out as much as I possibly can in terms of this ISA over the total financial year. The fifth biggest dropper they've had within the portfolio over the last month then has been Unilever, and it's dropped by 1.93%. Here's my holding here. So the reason behind this actually is because JP Morgan have changed their view on European staples. They believe that they're more bearish now in terms of European staples over the next couple of years, and that has had an impact on the stock by dropping at 1.93%. For me, that's just noise. It's not going to make any difference in terms of my investment strategy into this business in the long term. The fourth biggest dropper over the last month has been 3M, and couldn't really find much on this, to be honest with you. All I could really find was that there was a view that sales were down a little bit because they weren't selling as much office supplies as they would do due to the COVID pandemic. But that's been around for 18 months now, so there's not really that much that has indicated why it has dropped. So again, just noise, and I'm continuing to hold and buy and drip into it. The third biggest dropper then is Visa. So this has dropped by 5.34% for me. So starting to get a little bit bigger now in terms of the drop. And this has basically been because of negative sentiment. So a couple of reasons. First of all, negative sentiment within the industry within the market, thinking that the business is probably a little bit overvalued at the moment. And the second reason is around increased competition within the fintech area. It believes that there's increased competition within fintech, which means that now Visa potentially it's got a bit more competition it's going to have to deal with. The second biggest dropper then has been Uber, and this has dropped by 8.13% for me, so quite a bit over the last month. The reason behind that is the continued impact of COVID is what is causing this stock to drop. So COVID has continued to have an impact into this stock, and in a way that kind of makes sense. But for me, I've recently started using grocery deliveries by Uber. I don't know if you guys have tried it, but basically you can get your shopping delivered and I did it and it was here within 25 minutes. That's mental. I mean, 25 minutes for getting your week's shop delivered. So if they can continue down that route and can continue to offer that sort of service. So I saw a report out last week that said that people are prepared to pay as much as 20% more for deliveries that are coming that quick. So there definitely is a market for it. So I'm not concerned by the drop over the last month for this one either. And the biggest drop, no surprises here, has been Virgin Galactic. So I'm down 25% over the last month on this one, so I'm still up until about 10% up here. I'll put a link to it here. I can't remember where I'm at, but basically that continues to be because Branson's pulled out. What has he pulled out? $300 million worth of stock out of the business within the last 4 weeks. So it's just continuing to crash it. So it doesn't really change anything in terms of the fundamentals of the business. There is some test flights due with the Italian Air Force soon, and next year we're looking at commercializing and actually getting paying customers on Virgin Galactic flights. So that will absolutely fly this stock as far as I'm concerned. I'm continuing to hold, and I'm happy with my position into this business. So on to the increases then, and the fifth biggest grower for me over the last month has been Disney, and it is up 5.04% for me. They're continuing to increase the subscriber count. They are continuing to focus in quality over quantity. So within Disney, they invest significant amount of cash into big budget productions, unlike Netflix that churn out material. Very different business models, both work in their own right, but it is working for Disney at the moment. On top of that, the parks have started opening. They've started to really open and really ramp up and take in a lot of customers and starting to take in a lot of cash. So as a result of that, the stock has grown over the last month. Next up then is Alphabet, and I'm 6.04% up on this business, so really happy with that over the last month. And the real reason behind that is actually the market still continues to consider this business actually to be undervalued. It is the cheapest FANG stock at the moment, and it is sitting at 28 times growth, even considered that it is the cheapest FANG stock. So for me, there's still plenty of room for this to grow even further. Next up then is Apple. So I am sitting at 6.52% up on this business. iPhone 13 is due out next month, so that has increased the stock value somewhat, but do expect to see a drop in the share price if that launch is in any way underwhelming. Second biggest grower for me then over the last month has been Tesla. So I am 8.03% up on that, and the reason why that has grown so much is there is some real bullish technical analysis coming out on this business, and that has made the markets increase their valuation of the business. It is not anywhere near where it was in terms of January highs, but it is up now at towards April highs, so it is starting to really come back to where it was before, and I really do believe in this business in the long term, and I'm not surprised to see the growth. On top of that, we saw the launch of the AI bot. It feels like a bit of a weird one. That it reminds me of the Cybertruck launch. I don't know what to make of it. If there genuinely is anything in it going forward, it could be absolutely groundbreaking, but I just don't know. I'm not completely sure about that one. But it certainly sparked some interest, and the stock has grown significantly over the last month. And the biggest grower for me over the last month has been Netflix. I am up 17.09%. It has now reached record highs, and the market is starting to catch up with their valuation in terms of what they think about this business. And that's basically what has increased it. So price targets have increased across a number of different brokers over the last month, and it has shot the stock up. It's just a case of the market actually starting to recognize the power of this business, and I'm all for it because I'm an investor in it. So don't want to dwell on anything else too much, guys. I just want a really quick overview of the top movers and shakers within my portfolio this month. Any comments, please drop them below. Let me know what you think. I look forward to seeing you all again soon. Take care.